Forex Street visitors. This is Chris Pulver here from Survival Trader. Following up with a video here for the pre-summer push to highs and lows article that I published here just in the end of May. The big winner for the pre-summer push would have to be the euro. We were watching some really critical levels here at 108.50 and again at 110. So basically the 108.50 level was this critical juncture right here. We had a bit of a fake out that went up to 109, came all the way back down, but did form a higher low. French elections created this massive gap that still remains across the board with all these euro pairs, which is what makes this recent move pretty interesting to see if we start hitting some seasonal tops here going into the summer, see if the euro will then retrace back into some of these previous lows, possibly even filling that price gap before a continuation higher. There's also, massive range highs way up here at 116. There's also a potential trend line that the euro dollar might be running into before we see a correction. So it is very possible for, the euro dollar to continue going a little bit higher towards 113.50, 11400, then starting to come back into some balance. Or of course, we might just see it create some type of pattern in here, stalling back down for correction, having some summer ranges, possibly closing up a lot of these euro gaps before a movement higher. So big winner would be the euro. I'd say the big loser in this case was the dollar, and we can also see that on a larger time frame, the dollar index has not fared very well over the last few weeks. So let's take a peek here. Now keep in mind on the dollar index, we had this tremendous surge from August of 2014 all the way into March of 2015. Now, from a technical standpoint, that looks to be a pretty convincing rising wedge. All right, so that trend line has broken. That is a big break of this trend line. Now, it doesn't necessarily mean it's going to be just a falling knife and the dollar will never see any type of retracement or rebound. But at the same time, this is a significant break. So what really I'm looking for with the euro dollar, with the dollar Swiss, with the pound dollar, with some of these other crosses against the dollar basket would be something like this: a meaningful retracement and then a move down. So unless this move gets out of balance, meaning let's say that the dollar does continue to fall, well, in this case, coming back down to these critical lows, I would fully expect there to be a reason to correct and then a reason to go lower. So the key here is whether we correct first and then we have another leg down, or if we continue down and then we make a correction back up, only to then fulfill the pattern. So we will see how this all plays out. Going into summer months, we're probably not likely going to see these big trends. So what we're prepared for here is correction, consolidation, ranges, things like that. So some other big levels here. Let's just take a look at the euro basket really quickly. So the euro Aussie, big move up off of these lows. Again, we had this massive run. Price gaps still remain across multiple feeds with different brokers, but big price gap here on euro Aussie. And, really from the French election, which had the markets kind of at bay and everything was kind of speculated in and then officially came in, big price gap. So this is really the pre-summer push. Here's April, here's present, the end of May. That's, just over 2 months of trading and about 1,200 pips of movement. That's euro Aussie. Euro Canadian dollar. There's your gap. We started in with this pre-summer movement, kind of on the speculation that everything will be fine in the Eurozone. There's a move from 140 all the way up to 152, another 1,200 pips. Let's go euro pound. Not nearly the amount of volatility, but the euro pound from the election gap. This one did come very close to fulfilling, as far as filling the price gap. It didn't quite do it. Nevertheless, we had lows here at 83.50 all the way up to 87.50. So a pretty big move, all things considered, and not really much of a retracement. Euro yen, another big one. I mean, look at these. These are just massive moves. This is the seasonality of the Forex market. We have these trending seasons from January to May. That's considered, the start of the year, our main trending season, pre-summer push. Then June, July, August, we typically have range-bound trading, consolidations, retracements. August to September, we start either, fulfilling and completing these corrections, or we start getting those pushes to line up again for additional trends to end the year. So the euro's been the big winner over the start of 2017. A lot of the movement became very volatile, increase in volatility. A lot of momentum was added in after that French election. So more and more with these major, pivotal elections in the US and in Great Britain with Brexit talks and the European Union. I mean, these political things fundamentally are really stirring the markets up. Now, on a positive note, they're creating movement. on a difficult note, it's that these happen over the weekend when brokers are closed and traders have very little to do with the results and where the brokers get positioned and if there's gaps to fill and if there's slippage and things like that. So I mean, traders have to be very careful moving on to these elections. Trade size is always important, managing risk is very important, but there is no perfect answer here. Whether it's truly technical in the Forex market, truly fundamental in the Forex market, you really can't have one without the other. So it's important that we have a geopolitical and macroeconomical understanding of things, but at the same time, following sound price action, following sound technicals will tend to work out in a very efficient market like the Forex market. So as far as the pre-summer push, it's kind of in. Now there might be some continuation on some of those euro pairs. We might see kind of last minute pushes, but I would say given the first couple weeks of June, things will start to settle in. What I'm looking for is how does volatility fare? We've had some really decent volatility from April to May. So what will be interesting to see those trading ranges as they produce, maybe half or 2/3 of the current movement. So an example being if the euro dollar is able to push, 100 pips when we have reasonable volatility, perhaps it's pushing something like 50 to 60 pips during those summer months. So if the volatility does shrink, then the market will tend to look for some carry. We'll tend to look for some of those, tighter positions where the Aussie, the New Zealand, and possibly even the dollar, if the Fed maintains this tightening policy, we're at 1% for the US dollar. We might even bump it up to 1.25 in June or September. So if that's coming down the pipeline, the dollar is up there with one of the highest yields in the major currencies, and it's going to be tough to just have the dollar get crushed unless there's additional volatility. So we'll see how this all unfolds in the summer, but thanks for watching. This is the pre-summer push at FX Street. Again, this is Chris Pulver with survival-trader.com. Take care.